Hi, everyone. This is Debbie with LeanLaw. As you're coming into the room, just wanted to welcome you. We will give it a couple minutes for people to make their way in, and we'll get kicked off in just about a minute or two. And while we are waiting for others to hop in, why don't you? Oh, I see some familiar names in here. Hi, Chrissy. Hi, Latasha. Tina. Good to see you guys. Um, can you just let me know if you can hear me? And just in the chat, if you could put in where you are dialing in from today. I love to hear where people are calling in from. So in the chat, just let us know where you're dialing in from. Looks like we've got California, Arizona, more California, Houston. Calvin, my husband, is heading there tomorrow morning. He's going to be gone for like a week. So, but he's going to be in Houston. Hopefully the weather will be kind. Looks like we have Indiana, a couple from Indiana, and Emily from the Philippines. Emily, what time is it for you? It's got to be somewhere like in the middle of the night, I'm guessing.
2 a.m.
2 a.m.
Oh, bless your heart.
That's what I figured. Oh my goodness. Minnesota. Oh, in Houston, it's been raining? Really? How weird. It's June. That's interesting. Okay. Well, hopefully he's really good at checking the weather. I'm sure he'll be prepared. Um, so I'm going to go ahead and get us kicked off here. My name is Debbie. I'm the partner program manager here at LeanLaw. I am joining you all from beautiful Williamsburg, Virginia. I moved here 6 weeks ago, and so literally still sort of like, you know, getting back on our feet over here. My husband was originally from Virginia, so for him it's sort of moving home. For me, it's moving away from the West Coast where I've always been. So, but it's gorgeous here and so much to explore. And Tracy, let's go ahead and just pop over to the next slide. Awesome. So I'm so glad that you all could join us today on this Thursday. Hopefully everybody has their lunch. They can, eat a lunch or something while you're listening in to the presentation. We are here to talk about trust accounting, and especially in the scope of law offices. Although we know that trust accounting is utilized in a lot of different industries. Like I said, my name is Debbie. I'm the partner program manager here at LeanLaw. I have been in the tech space for about 10 and a half years. I started with a little company called T-Sheets 10 and a half years ago out of Boise, Idaho. They were acquired by Intuit, became QuickBooks Time, and I stayed on post-acquisition. I left Intuit about 6 months ago to come work for LeanLaw and to work with partners on this side of things again. And it's been wonderful and refreshing and love working with the LeanLaw team. Great group of people, great product, and so really excited to be able to show you guys today what that looks like. And then I'd like to introduce you to Tracy. Tracy has been working with LeanLaw for a lot of years, and Tracy, I won't steal your thunder. Can you go ahead and take it
Sure.
away?
Sure. I'm Tracy Cook. I've been with LeanLaw for a little over 5 years, so I've been around for a few minutes. I started out doing bookkeeping and accounting over 30 years ago, and that started with a law firm. It was a five-partner, multi-practice area law firm, and that's kind of where I got my start. Since then, I've been a firm administrator, accounting manager, worked for contingency firms, music industry, all over the place. So I've been doing this a long time. And yeah, so I'm here to help and explain and answer questions at the end.
Excellent. So just a couple of quick housekeeping things. Um, Just so you know, this session is being recorded, and so we will be able to send you that recording after the webinar is complete this afternoon. So if you want to go back and review anything, you can. We are going to be having a Q&A session toward the end. So as we're going through the presentation today, if you have any questions, just put them in that question panel, and we will cover them when we get to the end. We will also be running a few polling questions. We don't have CPE credit for today's session. However, polling questions really help us, kind of know where the audience is at, and so that Tracy can make sure to sort of tailor what she's sharing to what's relevant to all of you. So do please put your questions in that question panel, though. You'll see that at the bottom of your screen. And with that, Tracy, can you go ahead and tell us, why does trust accounting matter?
So we'll be covering that as part of this. And then also the fourth thing on the agenda, how LeanLaw works with all of that. And we'll go into some very specifics as we go. A little bit about LeanLaw. I know we've got some new people here, some new names that I don't recognize, as well as some old friends. Hi, Lee. And I just wanted to give a little quick overview of what LeanLaw is in general. So LeanLaw is a time and billing software program. It was developed by an attorney who has, intimate knowledge of the pain points that attorneys go through when they're entering time and trying to get their billing done. It was built in conjunction with QuickBooks Online in mind, because it's very deeply integrated into QuickBooks. And for all of you accounting people out there that may have worked with attorneys in the past, if you also using QuickBooks, you know that most attorneys really don't like going into QuickBooks. And usually it's okay if they don't. Sorry for any attorneys on this call, but I'm sure you know what I mean. So LeanLaw was built so that the attorneys could do everything they needed to do in LeanLaw, but still have all of the QuickBooks data available to them. So they can see invoice amounts, trust amounts, accounts receivable, all kinds of information that otherwise they'd have to go directly into QuickBooks for. So it's just really great how it all integrates. It makes life really easy for the attorneys as well as the accounting and bookkeeping staff. Okay. All right. Poll number one. I think something's going to pop up on your screens. Molly, can you just let us know when that's done so that we can move on?
Yeah, sorry.
It's okay.
That first polling
Finding the
question tends to
poll.
sneak up on us, doesn't it?
All right, it's launching now.
Awesome. So what percentage of your clients need or have utilized trust accounting? This is the pick the best answer kind of question. And we'll give this just about a minute, then we'll close it.
Okay.
All right. What percentage of your clients need or have utilized trust accounting? And Molly, can you share the responses with us? Excellent. Okay, so kind of an even split between the up to 25 crowd and the over 75% crowd. So
Nice.
that's interesting. Nobody in the 26 to 50.
They either kind of do or they really do.
Exactly.
All right. Okay. So a lot of you that have been in the legal sector for a while will know all of this, but just in the event that there's any really new people that are new to law firms and or trust accounting, I'm going to go with some basics. So for some of you, just bear with me while we do this if this is information that you already know. So The main reason for trust accounting is to keep your client's money and your firm money separate. That's done for a number of, legal and ethical reasons. And these are rules that are set up by the American Bar Association, the ABA, kind of has the model set of rules. And then each state bar association has their own set of rules and policies and procedures modeled off of the ABA, but they can add some more information in there. So in other words, they can have either more or less requirements based on their own set of practices that they're requiring for their state. Transparency is a big reason to have this because you need to always be able to show your client what money they've given you. I'm going to back up even a little bit more in case there's anybody really new on here. So I'm sure you heard that if you hire an attorney, a lot of times you have to give them a retainer upfront to secure their services. Most of the time, in the engagement letter between the attorney and the client, it's stipulated specifically how you can use that trust money. Retainer and trust can be used interchangeably. So it's typical that in that agreement, the attorney will say, okay, I need $10,000 up front, and every month I'm going to send you an invoice showing all of the work that I did for you. And you're giving me permission to take the amount due for that invoice out of that retainer money and pay myself. So that's typical of the kind of agreements that are made. One of the biggest things is to keep separate accounts. So your operating account, which is your main checking account that's used for, payroll and pay the electric bill and things like that, that's the firm's money. And then your trust account is all of the money that your clients have given you for those retainers. Or it could be escrow money for sales of a house, and a lot of different reasons people will give money into a trust account. There are two different types of trust accounts. You can have a regular trust account, or you can have an IOLTA trust account. I would say with all of the different firms that I work with, probably 95% have IOLTA accounts. IOLTA stands for Interest on Lawyers Trust Account, and it's a program set up by each state bar where the money that's in that bank account can gain interest, because the lawyer can't make money, so the lawyer can't keep that interest. So the bank pays interest into the account, and then the bank takes that money back out and sends it to the state bar, and they pool that for different things like indigent people and different programs that they use for the public. So most people use IOLTA accounts. One of the things that comes up a lot as far as compliance is that sometimes firms put it all in one account, but they don't keep track of whose money it is. So there's a lot of rules that go into that. And we're going to jump into that more when we actually get to the live demo part. So let's go ahead and go to this. Yeah, common challenges. These are pretty simple. One of the big ones is commingling funds. Maybe you deposited trust money into your operating account by accident and figured, you're just going to leave it there because at some point it's going to be yours anyway. Really bad. Lots of serious implications there. You can get severely fined or disbarred, and you have all kinds of audits happen. So you definitely want to avoid making errors. I've had clients in the past that never had any type of formal trust accounting other than a good old Excel sheet. And it's very easy to make errors, even if you have your formulas all set. One little mistake can throw everything off. So that's always a big thing for people that don't have like an actual program to help them. Other issues can be, if a client says, hey, I want to see all of my trust transactions, and give me an accounting of what my retainer account looks like. And if people don't have good records, that makes it very difficult to do. And then, of course, risk of non-compliance. Audits happen. You can be doing nothing wrong, and you can just get a random audit. I've helped two people that hired me after they were already in the midst of an audit that were not using LeanLaw to kind of help them through. And it was just awful. A lot of things could have been avoided had they used a program like LeanLaw, that really helped kind of keep them on the straight and narrow, and really helped ensure that what they were doing was being done correctly, and that they had the ability to kind of spot check things along the way and make sure that they were doing things right. California, and I saw we have some people from California here. 2 years, I think it was January of 24, sent notices out to the attorneys as they re-upped on their bar dues, that there's a special form now for trust accounting that has to be completed every month. I have that, and I'll show that afterwards when we're doing the demo. And they're supposed to be doing, ramping up their audits in California. That may or may not happen, but it's definitely good to have everything in line with the way that the state's asking you to do that. So challenges, yeah, there's lots of challenges along the way, which is kind of why we're here and talking about LeanLaw and how that can help. Okay, so here we are, LeanLaw. Compliance first design, and I'll show you again when we're looking at things. There are some kind of built-in things in LeanLaw that are going to help you stay compliant. One of the things is every time you record, a deposit, you need to have a lot of information in there, who it's from, what it's for, and so forth. LeanLaw has that ability when you're creating that trust deposit to put that information in there. It's right there in front of you, it just needs to be filled out. There's also, the famous three-way trust reconciliation. Well, LeanLaw has a view that allows you, every minute to be able to see your three balances, your client balances versus your total liability versus your check register in your trust account, and to keep assured that all of those three balances match all the time. And so it's very simple to stay compliant and keep everything in order. Also, as I talked about earlier, the fact that LeanLaw just integrates completely in QuickBooks. All of the financial information actually lives in QuickBooks, but LeanLaw just allows you to do most of that work in LeanLaw, see all that information in LeanLaw, while your actual financial data stays in QuickBooks with your other financial information. And then again, it was built for ease of use by law firms and their accounting teams. As I said earlier, it was built by an attorney. So he had a firsthand look of what he needed and what would have been good for him. All right, Molly, polling question number 2.
Right. So what industries do you guys serve? And this is a multiple choice. And obviously we kind of focus this on industries that that could potentially be utilizing trust accounting, but just curious, what industries are you guys working with? Oftentimes it's a lot, isn't it? Working across a lot of different industries. We'll keep this open for just about a minute, and then we'll go ahead and close it and share the results. Okay. Lots and lots of law firms. That's not surprising. And then real estate was the next. Okay. Fund management, nonprofits, and other. Perfect.
And I'm going to mention there's a lot of different, even other than what's on this list, different industries that this can be used for. I was the accounting manager at an architectural landscape firm, as well as a regular architecture firm at one point. And both of them is completely similar because they keep the money when they take their deposits. In those two particular companies, they didn't take the money as earned when they got the deposit. So they worked off of it and billed against it. It's very similar to a law firm. So there's lots of different ways to use the trust accounting in ways other than for law firms.
Tracy, on that note, have you also seen perhaps with like custom home builders doing something similar? Do you ever see that?
I personally haven't, but it definitely could be used for something like that. Any type of service industry, and sometimes with the home builders, they'll basically bill in increments after so much based on benchmarks as the build progresses. So that might be a little bit different, but there's just tons of utilization for it. The other thing I thought about one time that I talked with somebody about was homeowners association, because
Mm-hmm.
they collect all of the money from all of the different units or houses or whatever the situation is, and all of that has to get deposited, and then it's generally used for improvements or whatever. But that was another one that kind of jumped out at me when I was dealing with a law firm client who had a homeowners association client, and they were using the trust just for that same thing. So
Yeah. So even though we're called LeanLaw and we're very much focused on law firms, lots of applications for the concept and
yep,
the software outside of just law firms.
yep, absolutely.
Yeah.
All right, so key features. And I know right now it's just kind of words and you can read. I'm not going to read it word for word because a lot of this will be evident when we do the live demo here in a couple minutes. But key features are basically the ledgers are created automatically for you. The trust deposits and paying invoices from the trust account is super easy. And it gives everybody some really good visibility. So not only the law firms can keep like a daily watch on things, in one click they can send the actual client trust ledger to the client and have everybody feel good about the relationship, and that the attorney is dealing with their fiduciary responsibilities appropriately. All right, more key features. Easily deposit, disperse, and transfer. Reduces manual entry. I think we're just gonna scoot up and get to the live demo that I'm itching to do. The continuous monitoring of the three-way reconciliation amounts. I talked about that a minute ago, and the built-in controls. All right, real-time syncing, preserves integrity, no double entry required. One of the things, although, you can do trust accounting without LeanLaw, and you can do it in QuickBooks Online, it's a lot more manual. It's going to require some journal entries and a lot more clicks and manual work. I'm just going to give you an example. When you pay an invoice out of trust and LeanLaw, in one click, it does four things. It pays off the AR, it decreases the client's trust ledger liability. It makes a recording decreasing the trust checking account and makes the deposit either in the undeposited funds or the operating account. So that one click does what takes, probably 5 or 6 clicks if you were to do it without LeanLaw. So I'm excited to show you that in a minute. All
And
right.
one thing that's unique about our integration with QuickBooks Online is that it's also a two-way sync, right? So, which is a bit unusual. A lot of softwares have like a one-way, sort of push, but not the pull of data back in.
Right. Yeah. So with the trust accounting and LeanLaw, 98% of what you have to do is done in LeanLaw, and there's about 2%, and that's only when it comes to writing checks that you would do on the QuickBooks side. And we'll go over all of that in the demo. But yeah, when you write the checks in QuickBooks, it goes to their ledger, and you can see that in LeanLaw. So it's definitely that two-way sync that makes it really neat. All right, Molly, you're up again.
Hey, so this question, what tools are you currently using for your trust accounting clients? Pick as many as are appropriate. And this is just where we're trying to gauge, like with the audience, do you sort of favor the all-in-ones? Do you still have a lot of clients in those desktop-based systems? Um, or are you not using anything other than just a standalone accounting? Um, how are
Why don't
you?
we need LeanLaw on this list?
I know. That was an oversight on my part. Shoot.
Oops.
Sorry about that, guys. I should have put LeanLaw in there somewhere. I'm always really curious to see,
Mhm.
what the mix is, on this question. So lots of standalone accounting. Cool.
Wow.
all-in-ones. I'm honestly I'm a little bit surprised that the all-in-ones are a little bit higher than a third, but fair enough. And then we still have a lingering desktop, and then one other, which is probably LeanLaw.
I hope so. I hope that was Lee. All right. Yay, time for the demo. So I'm going to actually stop sharing so I can reshare my other screen. So give me 1 second. And this is the part I was looking forward to the most.
It's always the most fun to see the
It
software in
is.
action, see the live
It is.
demo.
I know I hate when I go to webinars and people read word for word on what's on the slides. Like, yeah, I can read. Show me some fun stuff. All right, here's the fun stuff. So I'm going to just give you a little tour for those of you who have not seen LeanLaw before. Again, this is mainly a billing and invoicing system. So people have time entries that they enter, expenses, the billing area. As you enter time and expenses, it automatically comes into the billing area, so it's ready to be billed. You get your client list, your matter list, and then reports. So in the billing area is also where you would find your trust overview. So here I've got it. I've got this particular firm, LeanLaw 25, has 2 different trust accounts. They've got a Tennessee IOLTA and a Texas IOLTA. So apparently they've got a Texas office. And I can see when I look across that the client balance equals the liability balance, which equals the bank register balance. And I can see my numbers are nice and even. Now it's defaulting to the Tennessee IOLTA, and I can see here I've got ABC Company that has 2 different matters. ABC Company is set up at the matter level, meaning in this case, their trust money is set up individually per matter. So their general corporate has 1,500, and the 321 Oak Street lease has 3,760. If I click into this, I've got 2 ways to open it. I can open a LeanLaw view, or if I open this, it's going to go right to the trust ledger in QuickBooks. But I'm not going to do that right now. I'm going to open the LeanLaw version, and I'm going to see that I can see 2 things. I can see when the original deposit was made, and then I can see that a payment went out for an invoice. So it's keeping track of it. I've got the option to print this for the client, where it'll look even prettier. It'll have like the client's name and address and all of that, the name of the matter, the firm's name up here. And this can be saved, and this can also be attached to an invoice and sent out if you needed it to. Now, when the trust accounts are set up initially, you can see that they're connected to the bank accounts that are in QuickBooks, as well as each one has its own liability account. I'm going to pop into QuickBooks now, and we can see here that we've got our Tennessee IOLTA bank account set up as a trust account, as well as the Texas. And as we go down further, I can see the liability for the Tennessee, the client, and because this client is matter level, the sub liability for each matter. And then in the Texas one, I've got a single person that was set up at the client level. So I don't have a sub. I've just got the sub liability for Bob Jones. And all of this is what you're actually seeing when you're in LeanLaw. So this information doesn't live in LeanLaw. This is just LeanLaw looking into QuickBooks and reflecting that back. So it's attorneys don't have to go into QuickBooks. You can see all of the information you need right here. Okay. Now, I'm going to go ahead and actually do an invoice. Let's see. So ABC Company, General Corporate, I have $400 worth of money sitting here. So the first thing I'm going to do is send it to draft. I'm going to try not to get into a billing lesson as I go. The draft area is where you can review things and make changes and edit if you need to. And then I'm just going to approve and submit. When I do that, it goes behind the scenes, and the invoice is actually being created in QuickBooks as we speak, and it's coming up with a QuickBooks number. But now it's moved over to manage invoices. So if I open this up, it's going to show my amount. It's going to show my starting trust balance and so forth. What I want to do now is pay this $400 out of the $1,500 that I can see he has in trust. So all I'm going to do is click Pay from Trust. I'm going to take the whole 400. It's today, and I'm going to say Pay from Trust. This now paid off that invoice, so it's not in the not paid section, it's in the paid section. And this would be the one that I would send to the client, because now when I open it up, I can see that I paid 400 from trust. My trust balance is now changed to 1,100, and it shows that this invoice is paid. So what I would do is this would be the one that I would now come in and email to the client so that he gets a paid copy and see his new trust balance. Okay. I also have the option, before I email it to him, I can actually attach his whole trust statement, which would be the thing I opened up a few minutes ago. So now you see the little paper clip. And so now, in addition to getting his actual invoice, he could have his trust statement. That would be helpful if maybe there'd been lots of transactions over the months. And even though this invoice is going to show this current payment, if you attach the trust statement, then it's going to give him his whole history of his trust account. So that's always an option. Now, let me show you over on the QuickBooks side what that did. Let me refresh. All right. So now if I look at let's see, where did I take that from? If I look at the register, I can see that $400 came out. Now, if you have a firm, they don't often do this, but I know of a few who do, that actually will print out an individual check out of their trust account to deposit to their operating account. You can put a setting in LeanLaw to say to print. So it would just say to print, and it would go into your print queue. You could actually print these out. But this is all recorded here. I can see that in my operating account, it recorded this as a deposit. So now all that's left that has to be done is you would just go online to the bank and make that transfer. You can also set those to go into undeposited funds, so that if you're making one bulk transfer, you can bundle all those individual payments together and make the transfer. On our chart of accounts, I'm just going to see that, again, that money came down. Oops, that was this one. And we can see where that happened. Now, as far as making a trust deposit, and this is one of the things that I was talking about earlier, as far as staying in compliance. So let's say I'm going to make a deposit, and ABC company is going to send some extra money in for their general. I'm going to say they paid by check. Let's say they sent in another $2,500. So this is where the from and the use are really important, because I've not seen any state bar regulations that did not require everything to have who it's from and what it's for. Now, if this was maybe sent in by somebody else, maybe this came from an insurance company, you would want to put that it's the insurance company that sent it. And then you'd say exactly what it's for. ABC company claim for something. Legal services. All right, and you've recorded. That way you've got very specific information. So in the event that you ever do have an audit, you're halfway there with information that you've got. Now, again, as you can see, these numbers go up and down evenly. Now, this one, I'm going to look at this Texas one for a second. This is Bob Jones, and this was a real estate deal, and 50,000 came in, and maybe there's no fee. Maybe there's just a pass through. It was just coming to his attorney first, and there was no fee at this particular point. If I want to disperse that money, I'm going to go into QuickBooks, and I'm going to write a check. Bob Jones, and add up the Texas account. It's going to come out of his liability account. You can see it says sub account of funds held in trust, Texas. And oops, I erased it. And that's, I'm gonna give them the whole 50,000. And I'm gonna save and close. Now, when we go over to LeanLaw and we go to our trust accounts, it shows that all that money was gone because as long as when you're recording any checks in QuickBooks, as long as you are assigning them to the sub-liability account, they're going to come up here. You can see, we can see the original deposit, and then we can see the out. All right. Three-way reconciliation, everybody's favorite. Like I mentioned, it makes it easy to prepare for that when you're using LeanLaw, because you can kind of see that you've got everything in line as you're going. The actual reconciliation, however, is done in QuickBooks. So the first step is always going to be to do the bank reconciliation. I don't actually have any statements or anything like that, but we'll just walk through this a little bit. So like any reconciliation, you're going to put in your statement ending balance from the bank statement and your statement date. You'll do the reconciliation. Once that reconciliation is done, you'll have your reconciliation report, which you can find in your reports. I usually bookmark it so it's up top, but this is going to be the reconciliation report. And what you're going to do is you're going to take that and, well, let me back up. So up until a few months ago, I would take that and I would pull a balance sheet for the same month, make sure that my statement balance, my register balance, and all of my total individual client liabilities matched. And I just put them in a Google Drive folder, and that was fine. Until I got this California notice that the California thing was different. So I still do the same steps. I still do the bank reconciliation. I print out that report, PDF. I pull the balance sheet, but now this is the California one. This has to be done and completed. It does not have to be sent in, but it needs to be done and signed and just kept on file. So I took this because it looks worse than it is. It's really pretty simple. I took this and I made another version without all of the California rules and regulation stuff. So I just use this kind of stripped down one that doesn't refer to the California things. And I just take my trust account journal, do all of the little boxes. This I take from my balance sheet, the individual client balances, the individual ledgers. If there's any outstanding deposits and checks from my bank reconciliation report. And then at the end, all the blue boxes should match, which they do. Then I just fill it out, send it to the attorneys I do things for. They send it back, and we just keep it on file. So that's that. All right. I don't know. I guess I'm going to go back to the slides, but in the question and answer session, I can easily pop back on here if we need to. So Debbie, is there anything you can think of that I should have mentioned?
No, nothing that I can think of.
Okay, let me switch back to the slides. And move some stuff out of my way. Oop. All right, so I think we did a lot of this. We created a trust account, made a deposit, reviewed trust ledgers, through a reconciliation. Perfect. All right, because I wasn't looking at that a minute ago. All right, so benefits, I think, for those of you who deal with trust accounting, hopefully you can see the benefits. It makes things very easy, helps to keep things accurate, cuts down a little bit on potential for errors, makes it very visible to the client and the firm. And if you're an attorney on here, you get more time for billable hours. Who's laughing? All right.
I'm not sure. I couldn't tell who that came from, but I think it's like, and I saw that pop up.
All right, Debbie.
Mhm.
Do you want to talk about was this supposed to be here or?
Yeah, it is. Yeah, before
Okay,
we hit polling question number 4. So,
okay.
I recognize several names or in the participants who are part of our Lean Law Pro program, but I just wanted to uh, let those of you who are, accountants, bookkeepers who work with firms or other companies that could really utilize the assistance with trust accounting that Lean Law provides. We do have what we call the Lean Law Pro program or partner program where you can get special discounts for your clients, and there's benefits for the partner or the Lean Law Pro as well. And so it's a program where, like I said, you can get, the why you would join is, a lot of our pros join because they want to be able to, get special discounts for their clients. And that's one of the main reasons, and to be able to offer Lean Law to their clients at a special price. And just like, with your clients that are on QuickBooks Online, if they're purchasing that through you, you're able to give them some better pricing on that as well. We will be sending out for the sign up piece. There is a link that you'll be getting in the follow-up email today that will have there'll be a link to our pro page. And sorry, I'm stumbling all over this. And but we'll have a link to our pro page where you can get a little bit more information. Also, if you want to sign up for the program, feel free to do that there. For those of you, my beautiful pros that are on the call today, you don't need to sign up again, but I'll be sending you out a little thank you for joining the call. I think that actually takes us to our last polling question.
I think it
And
does.
thank you guys so much for the engagement on these polling questions. I really appreciate it. So this last one is, would any of you like, or actually for all of you, just go ahead and answer, would you like additional information on either Lean Law or the partner program? Either yes, send me info on Lean Law, or absolutely send me information on the partner program, or no thanks. And you can actually choose multiple. But if you choose yes, you want info on the partner program, but no, you learned what you need, I'll be really confused. So, but go ahead and let us know if you'd like more information either on Lean Law itself or on the partner program. Excellent.
All right. I see a question. So how to connect QuickBooks to Lien Law. So if you're working with somebody who already has a Lien Law account, it would automatically be connected to QuickBooks because Lien Law doesn't work without QuickBooks Online. But generally, how that's going to happen is, let me reshare to my other screen. Right, yeah. It's basically connected through the integration settings, and it's just a little process. If you're not connected, it'll say connect to QuickBooks. You have to be a company administrator in order to connect. You would make sure that all of your settings are attached to the right accounts, including your expense settings, and then you would just connect that way. The trust accounting is done in the second step, where you first select the payee vendor, which is always the law firm, connect your operating account, and then add your trust accounts.
Excellent. All right. And Tracy, are there any other commonly asked questions that you get when you're working with clients that you didn't cover during the demo? I'd imagine you probably cover most of the commonly asked things. And then we actually do have a question here. Are there any means of having electronic payments into trust?
I am so glad you asked that. Yes. So LeanLaw partners with a company called Confido, and I don't have this set up here, but what will happen is if you have an account with Confido, there's an extra option on your screen that in addition to saying deposit on trust, it'll say request trust funds. When you click that, an email will be sent to your client and you can request, whatever money you want to request. That will go out with a link, and you would have that link connected specifically to your trust account. When that happens, your liability account and the deposit and lien law would automatically be taken care of. All of that would work together. Latasha is asking, does lien law have an accountant view if clients have lien law? So at the moment, the accountant seat is free. And this is going to look kind of weird because it's all me, but I set myself up through my lien law accountant account as the accountant, but then I added me as a user. But theoretically, if you are working for a firm, you can get added to their account by having them add accounting partner. And if you have a lien law accountant account, what you would do is you would just actually start the firm yourself. You would go to my firms and then you would just say add a firm, or that is somewhere, add a firm. And then you'd be able to add the firm from there. Okay.
Natasha, being able to see that is similar to with QuickBooks Online Accountant, where you can go up to the
Like that.
top and see all of your listed
Yeah.
clients. The Lien Law Accountant account is similar, where you can get to all of your, there we go, all of your clients all together there. So that is very useful when you're working with multiple clients that you have on Lien Law.
Yes.
And then there's a follow-up question relating to electronic payments. And by the way, so many businesses these days like to have those payment links because it makes it so much easier and faster compared with having to cut a check and get it to the mailbox to pay your stuff, or going into your bank like your payments in your in your within your bank and sending
Bill
off the
pay,
payment that
yeah.
way. Bill pay. Yes,
Yeah.
that's the word. Thank you. I use it personally for like,
I know.
personal household stuff. And I was like, what is that word again? Bill pay. So, but having that linked make it, so easy for the clients to pay the bill. Actually, there's been a lot of statistics, and this was, we talked about this a lot when I was part of Intuit, is, businesses get paid. And I don't know what the percentage is, so I'm not going to make it up, but an immense, a really big percentage of faster. Gosh, words today are a struggle. Anyway, but they get paid so much faster when you give them an electronic means to make the payment. And Trevor is asking, does Confido, do we have a fee, or do they charge a fee? And the answer to that, Trevor, is
I'll take that, Debbie.
thank you. I didn't want to
Okay.
answer wrong.
Yeah. So there's no fee to use it, but it's 2.95% for debit and credit cards. It's 3.45% for American Express, and it's 1% for ACH with a $30 cap. So it's very close to QuickBooks Payments and LawPay. And a LawPay has a per transaction charge as well. So if you have Confido and you have your operating and your trust account set up, when you do invoicing and lien law, those invoices will automatically be created with a payment link. And when you email them to the client, actually, let's just look at my screen real quick. When you email them to the client, you're going to actually be able to track your sent emails over here on the left. And you can also go into Confido and track the payments. But when somebody clicks on a link, when they get that email, Confido knows it's paid. Confido tells LeanLaw tells QuickBooks, and everything's recorded automatically for you. So it's pretty cool, and it's really good with the trust accounting too, because it just puts everything where it needs to go. I see Emily has a question. We have Bill.com integration with QuickBooks for operating expenses. Will this affect sync integrations with LeanLaw? Can we integrate Bill.com and LeanLaw? So if you're using Bill.com, that's not going to affect anything as far as using lien law. Now, if you have client expenses, that you're going to then bill your client for. If you're using it just for operating expenses, it's got nothing to do with anything and you'll be fine. If you're tracking client expenses, and if you can assign them to your account that's connected with LeanLaw. So I can show you real quick. So in this case, I have an account called Advanced Client Costs. And anytime I create either a check, an expense, or a bill, and I put it to advanced client costs and put the client's name in, it goes into my advanced client cost account, which is set up as an other current asset. It goes into LeanLaw, and as soon as I bill that, so if I just went ahead and billed that right now, it's going to come out of that advanced client cost account. So it's just an in and an out, and it gives you a way that anytime you look at this balance, you can see the amount of unbilled expenses in LeanLaw. And we're going to see now that that 260 went away because it just came out of there. But we can see at the time I created the expense, it came in, and at the time I created the invoice, it came out. Back to the bill.com. So if you can get bill.com to go into QuickBooks, into whatever account like this that's connected for your client expenses, that will work fine. I use Dext and HubDoc, and it does the same thing, and it works great. So I hope that answers your question. But again, if you're not using it for client expenses, just for overhead, nothing will change for you. All right. Debbie, any other questions on your end?
No other questions yet. Does anybody else have a question they want to pop in there before we close down for the day? And I appreciate everybody staying on till the very end and the engagement with questions and with the polling questions, everything. It's been wonderful. Nina, you're very welcome. Thank
Oh,
you.
thank you.
Nina, I think, is like one of our most avid learners from the standpoint. I'm calling you out, Nina. Nina just cannot get enough about LeanLaw. I know that you come to a lot of our webinars and and also view a lot of our video content on YouTube and things like that. So love seeing your name, Nina. It always makes me happy.
And I'll mention too, if anybody has any further questions, or I'm happy to meet with anybody and kind of walk them through things if you wanted a deeper dive into some area that you saw. Because I know I probably ran through a couple of things that really weren't on the agenda today. So if you guys want to know more, just can't get enough, just let us know and I'll be happy to set something up.
Okay. Sounds good. Well, if there's no other questions, thanks everybody for joining us. Appreciate it. And we will see you all on our next webinar.
Thank you.
Thanks, guys.